The monthly CPI surprised on the softer side of expectations in May. While it's not a perfect measure of inflation, it nevertheless, used judiciously, it can provide an early guide of the momentum in inflation. So, what are the three key points we learned from the May monthly CPI indicator? The first is that housing cost pressures continue to ease, particularly for dwellings, where for most of 2025, builders and developers have been discounting prices to try and move more stock. Secondly, services inflation has taken a step down, and in May, the ABS noted softer than expected price increases for restaurants, hairdressing and grooming, audio, visual and media services, and perhaps most surprising, a fall in insurance premiums. Thirdly, if you combine points 1 and 2, then this is further evidence that a step down reported in core inflation, in this case the trim mean measure preferred by the RBA, appears to be sustainable. As such, inflation does not present a further barrier to further rate cuts from the central bank. So let's dive into data and see where this moderation in inflation is coming from and where there may be areas of concern. In terms of detail, the monthly CPI indicator gained 2.1% in the year to May, softer than Westpac and the market's median estimate of 2.3% through the year. The range of forecasts was quite wide, from 2.1 to 2.5. In the month, that was a 0.4% decline, a larger fall than we were looking for on the back of smaller than expected rise in electricity, a larger than expected fall in holiday travel and accommodation, and as noted earlier, a surprising fall in insurance and a flat print for dwelling prices. The core inflation measure, the trim mean, moderated to a 2.4% through the year pace in May, a solid drop from the 2.8% pace in April. This was the lowest annual pace of monthly core inflation we've seen since November 2021. Electricity prices rose less than expected, owing to the energy rebates continuing to hold prices down more than what we expected, but we still saw an overall increase in May. Victorian households included only one instalment of the rebate, whereas many bills in April included 2 instalments. The overall impact of these rebates is clear, with the ABS calculating that electricity prices have gained 1.1% since June 23. Excluding rebates, electricity prices would have increased 17.7% over the same period of time, almost 18%. Dwelling prices were flat in May, following a 0.5% increase in April. Back in April, the ABS noted that price discounting by project home builders had led to softer outcomes in this category. We were cautious that this would continue and had penciled in a 0.3% increase, but the final print ended up being weaker. Taken at face value, the May monthly CPI indicator suggests downside risk to our June quarter estimates for both headline and the trim mean measures of inflation. After incorporating the data from the monthly indicator, our bottom-up estimates for the June quarter CPI suggest we are now looking at downside risks for our estimates. For the CPI, we've currently got 1%, 2.4 through the year, and our trim mean estimate is 0.8, 2.8% through the year. So as you can see, the quarterly CPI is likely to suggest that the core pace of inflation is still in the upper half of the RBA's target band, compared to the monthly CPI indicator, which is suggesting is in the lower half of the band. So while we're confident that the moderation in inflation has opened the door to further rate cuts from the RBA has been taking a cautious approach to interpreting inflation. And while further rate cuts are coming, the RBA is unlikely to rush into an aggressive easing cycle.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.